So, you're eyeing the Kansas City market for 2026 and weighing your options, flipping for that fast cash or holding for long-term wealth. Well, to make the right move, you absolutely need to understand the real numbers behind these two strategies. Let's jump right into this explainer and break it all down. Here is our roadmap for today. We will look at the Kansas City market landscape, uncover the reality of flipping, dive into the hidden wealth in holding, do a side-by-side comparison, and wrap up with a hybrid BRRRR strategy. Let's get to it.
Section 1. The Kansas City market. Low entry costs and high potential.
The median home price here is sitting right near $289,000. To put that into perspective, that is roughly 32% below the national average. This lower cost of entry is a huge deal. It is exactly what makes a profitable flip margin possible in the first place, and it keeps rental properties affordable enough for you to actually scale a decent portfolio over time.
Now, before we get too deep into the math, remember that this is purely educational content, not legal or tax advice. And here is a crucial pro tip for investing in this specific area. You have to pay strict attention to local compliance because navigating the property lines between Missouri and Kansas can be tricky. The rules and taxes literally shift depending on which side of the state line your property sits on.
So, what is the fundamental difference between flipping and holding? Honestly, it boils down to effort. Flipping is an active, demanding job. It requires intense construction management and a ton of speed. Holding, on the other hand, is a passive investment strategy. It is all about playing the long game, rewarding your patience, financing discipline, and having excellent property management in place. Let's move on to Section 2, the reality of flipping, or what some call the fast cash illusion.
You are probably wondering about those alluring profit margins you hear about, especially in areas like Independence or Grandview. So, how much can you actually make flipping a house in Kansas City right now? Well, let's look at a realistic scenario for a 2026 flip. Say you buy a property for $120,000. You put in about $30,000 for cosmetic and systems rehab, and then sell it for right around $200,000. That gives you a very solid 15 to 20% profit margin. And I completely agree, lending a lump sum return of that size in just a few short months sounds absolutely fantastic.
But you know there is always a catch. That beautiful margin can vanish in the blink of an eye. First off, flips held for under a year get hit with short-term capital gains tax, which is taxed as ordinary income. If you are a high earner, that takes 30 to 40% right off the top. Gone. Second, every single month that property sits unsold, your holding costs are piling up. We're talking interest, taxes, insurance, utilities. It all adds up fast. And finally, older Kansas City housing stock built before 1970 is notorious for unexpected foundations, sewer, or roof repairs. Literally just one major surprise can completely wipe out your profit margin.
This brings us to Section 3, the wealth in holding. This is the long game, folks.
Let's look at the honest math for holding in 2026. At current 7% interest rates with a 20% down payment, a $140,000 Independence rental property is going to realistically cash flow at negative $200 a month. Now, don't panic. At first glance, losing $200 a month feels like a terrible investment, right? But that is definitely not the whole story. This is where it gets exciting. There are 4 hidden wealth builders that completely offset that initial negative cash flow. First, your tenant is actually paying down your loan principal. On that $140,000 house, that is over $1,800 of equity built in year 1 alone. Second is appreciation. Even at a conservative 3 to 5% growth rate, you are gaining $4,200 to $7,000 in property value every single year. Third, we have depreciation, which shelters your income and can often turn a paper loss into a very real tax advantage. And fourth, rent growth. Over time, your rental income rises while your fixed-rate mortgage payment stays exactly the same, eventually turning that negative cash flow into positive monthly income.
Okay, Section 4, side-by-side comparison. Let's put these two strategies head-to-head.
Looking at the timeline, a flip takes about 4 to 8 months to realize a profit, while holding is a journey of 5 years or more. The tax treatment is drastically different as well. Flipping generates ordinary income, while holding benefits from long-term capital gains rates, depreciation, and the amazing ability to defer taxes entirely through a 1031 exchange. And effort? Well, flipping demands local crews and active hands-on management. Holding is a much better fit for remote investors wanting passive income, especially if you use a dedicated local team. A great example is Alpine Property Management Kansas City, where Alpine, a property management company that has been successfully serving investors in the area since 2013.
Finally, Section 5, the BRRRR strategy, the hybrid middle path.
If you want the absolute best of both worlds, you need to look at the BRRRR strategy: buy, rehab, rent, refinance, and repeat. It is a wildly popular hybrid approach for a reason. Step 1, you buy a property below market value. Step 2, you rehab it to force immediate appreciation. You are using the exact same skills you would in a flip, but instead of selling, we move to Step 3 and rent it out for those long-term gains. Step 4 is literally the magic step. You refinance the property to pull your initial capital right back out. Then, Step 5, you simply repeat the process with the extracted cash. You get the forced appreciation of a flip combined with the compounding wealth and tax benefits of a long-term hold.
Ultimately, we have to look at the big picture here. As Marcus Painter, founder of Alpine Property Management Kansas City, wisely notes, for most out-of-state investors, holding wins on total return. Unless you desperately need fast liquidity right now and have genuine localized construction expertise, holding is going to build you far more wealth over a 5-year horizon. The steady market appreciation and tenant-paid principal simply do all the heavy lifting for you while you wait.
Thanks for joining me for this explainer. I really hope this data gives you the absolute clarity you need for your next steps in the Kansas City market. Remember, running the real numbers before you commit is the true secret to success in real estate. So what is it going to be? Are you looking to create a temporary, high-stress job for yourself? Or are you ready to start building compounding generational wealth? The choice is entirely yours. For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.